Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I'm a coach and senior manager with Schwab. And today we are going to talk about the Fibonacci retracement tool. So I've got James Boyd with us in the chat. He's a friend and a fellow coach. If you're with us live, feel free to chip in and ask questions as we go along, because James has referred to himself as many things in the past, but one is James Fibonacci Boyd. So I think he is pretty familiar with this tool. In any event, it's a tool that we can use to help us understand what's happening in the chart, on a chart. And also, it's a tool that we can use to help us determine targets and potential pullback targets. So that's what we're going to talk about today. We're going to talk a little bit about how Fibonacci, this tool came to be. So, you know, I think it'll be a really informative 45 minutes that we have together. If you're not following us in the land of X, please feel free to follow both James and I, James Boyd CS and Barb Armstrong CS. We're posting their content there on a daily basis that, you know, it's news you can use. Okay. Know that everything that we cover here together is for general information purposes only, none of it to be construed as a recommendation or personal investment advice. And know that technical analysis is an important tool, and that's what we focus on in this class, in helping us become more effective investors and traders, but it's not the only tool out there. You know, there are things like fundamental analysis, being aware of what's happening you know, internationally in markets, and, you know, global political events. Dare I say, you know, we need to be aware of who's tweeting what these days also. Also know that if we have an options discussion, know that options carry a high level of risk and aren't suitable for all investors, and that's part of it as well. We will be looking at the paper money platform on the Thinkorswim desktop, and this is a brilliant place for us to learn and hone our skills in the world of trading. So for those of you who are watching this in the archives, if you have questions as we go along, you can type them into the comments. I want to thank those of you that are here live, and particularly those who are always so participatory in the chat. So to Riceberg and Will and Josh and Jay and the rest of the gang, thank you for helping bring this class to life. Okay, if you are brand new here, feel free to type a greeting into the chat so that we can welcome you. Somebody saying if I tweet, nothing moves. Yeah, not a lot moves when I tweet either. Yeah, and Wacky Wag, I was looking at your handle before we started. I don't know how you came up with that handle, but it's certainly, you know, an attention grabber. So this class is structured in a 9-week rotation. And at the end of that rotation, we will often throw in a couple of bonus sessions. So last week we talked about trading basics. And if you missed that, you may want to go back to the playlist for this class and catch that one. Today we're talking about Fibonacci's, and I'm not sure if we'll do another bonus session next week. We'll have to see what next week brings, but you know, but sometime in April, we'll be back at, you know, the beginning of the cycle, and we will go through it again. And you know, one of the benefits of going through a cycle multiple times is that every time we go through it, different things are happening in the market, and we're always looking at live examples. So that has a certain power too, because we're taking a look at these tools and how we can use them to make more informed decision in, you know, in the current market. Okay, so let's come out to Thinkorswim and look at, I'm going to come over to this other example account. And we're going to just start by talking about, and I always, you know, I have to think about this because I always want to, I pronounce it Fiba, but it's Fibonacci. You know, I always misspell it. And we're going to look at the Fibonacci retracement tool today. But when we look at Fibonacci, and this whole thing was developed by a man named Leonardo Fibonacci, who was an Italian mathematician during the Middle Ages. He lived from 1170 to somewhere, they aren't quite sure of when he died, but somewhere between 1240 and 1250. But the idea of a Fibonacci sequence is that you start with 0, and then you 0, not O, and then you go to 1, and then you add 0 and 1, which gives you 1, and then 1 and 1, that gives you 2, and then 2 and 1, which gives you 3, and then 3 and 2, which gives you 5, and so on. And then you go to 5 and 3, which gives you 8, and then you go to 13, and then 21, and 21 and 13 gives you 34, and then 55, and then when you add 34 and 55, it gives you 89, 144, 233, and it just goes on ad infinitum. And what they determined was that this pattern appears many, many times in nature, in the way a pine cone is structured, the way a sunflower is structured, the way trees tend to grow. So there's a lot of scientific applications. And when someone thought to apply this to a trading chart, they found that it had relevance there also. Okay. And if we look at the Fibonacci retracement tool, and I'm just going to come down here, and if you don't have it, if you click on your drawing tool and then come down, and if you highlight it, if you're saying, well, there's a couple that look like Fibonacci tools, this one is your Fibonacci retracement. So with Devon, for example, we recently had this run to the upside. And, you know, this is a stock that's up almost 38% year to date. So this isn't the first run to the upside it's had. You know, so we could look at this move here from here to here. And when it got here and started to pull back, we could say, well, where might we expect it to go? And when you draw this, it doesn't always show all these lines, the titles on them. But if you grab your toolbar here, this price bar, you can move it out and move it in. And so if you're saying, well, like, how come she has these numbers showing and I don't? So the 50 and the 100, this 0 and 100, and actually 0 is a Fibonacci number, but the 0 to 100 just shows you the length of the move. And then this 50% is just the halfway mark. So it isn't necessarily, this isn't a Fibonacci number. In this case with Devon, we had our move and it came back to about this 50% level. But where do these other numbers come from? Well, it turns out if you take, and I'm just going to grab a tool here. So if we look at, and this tool may be a bit wide, our 1 and 1, which is 2, but if we take this 55 number and we divide it by this number here, the number 1 to the right, let's see what we get. So I'm going to bring up our calculator. So if I take the 55 and I divide it 1 to the right, 89, divided by 80, oops. We get 61.7, and that's, 61.78 or 61.8, and that gives us this number here. Now, what if we went 2 to the right and I divided 55 by 144? Well, that's going to give us this 38% line. And then if I go 3 to the right, so 55 divided by 233, that's going to give me this 23.6. So if we're looking for where these numbers come from, that's where these three come from. Now, what about this 78.6? Well, if we take that same 55 and we go 1 to the left instead, well, actually, that's not the 78.6. This is going to give us this number up here. So our 55 divided by 34 is our 161, and this is our extension. So if I'm going to the right, it's giving me my retracements. If I'm coming to the left, it's giving me this 61 point, the 161 extension. This 78.6 is the square root of the 61.8 number. So if we did that 0.618 and we looked at the square root, sorry. Now, I'm not an under the hood kind of person. I'm just going to be really honest about this. Like, I looked at this for this class. So that's where we got this 78.6 from. I have been driving for many years now. In fact, we could measure that number in decades. But I have very little interest in how an engine works, how the pistons work. What's the difference between a carburetor and a fuel injection system? No clue. My car lets me know when it needs help, and I drive it to someone who can do whatever needs to be done under the hood. What I like to kind of describe it as, I hire a mechanic to do those things, but when I get out on the road, it's important that I understand, what a stop sign means, what a red light means, what the green light means. And technical analysis is our red light, green light, it's our stop sign, it's our merge. It's these signs of how to behave in traffic. And what I just went over with you on the Fibonacci's, and how these numbers are created is a little bit of under the hood. Yeah. Yeah. So when somebody asked, if I, do I count the wicks? And that's a personal decision. Now, the way I have set up my drawing tools, and you can do this any way you want, but it snaps the drawing tool to the open, high, low, or close. And you could just say, like, go to the center of the bar, but it makes it easier, then I think the default is none. So just come to general and snap it to your open, high, low, or close. And it's a personal decision. I'm including the wicks, which is a little more aggressive. And it's kind of a hypothetical point on this because, because this candle here didn't have much of a wick. It closed, it opened at 44 and it closed at 44.96. So the wick on this one is pretty tiny. But in fact, when we look at this, if we had looked at this on this day or this day where we had a bullish engulfing candle, if we had said, well, we like to use swing targets, well, we couldn't have used a swing target because it was pretty much at the swing target. So if we were looking for another way of determining a target, we could have said, well, we could use this Fibonacci 161 extension. And did it in fact go up and hit that target? It did. Now, is this a foolproof system? No. Yeah. And somebody said, I can hear James talking, he's Mr. Fibonacci body to body Boyd. And James does say that. So James is going to go body to body. Some people might go wick to wick. And there's no right or wrong answer. I would say when you're using the wicks, it's like, say, if we were using the wick from here, that's such a big wick. It's going to give you a more aggressive target than if you're just using the bodies. So the bodies is a more conservative way to go. And, I tend to trade more conservatively, but it just depends. Depends on the day, I guess, right? So that's kind of a past example using Devon. What if we wanted to use a future example? Because, we just had another bull flag setup, right? Where it came up. And if we want to use the body, we can. We'll click and come down to where we started this from. And so our 161 fib extension here might give us a target of 51.94. And where is it currently trading? at 50.37. Now, could we do a more aggressive target? We could go for the 261 extension. And it's a personal decision. And when this came down, how far did it come? Well, it came down to this 61. And often it's somewhere in this, it might come down to the 61, it might come down to the 50. If it cracks below this 38.2 retracement line, some will call that the point of no return and say, like, if it's fallen below that line, then maybe it's not a retracement, maybe it's a trend reversal. And so that's something that we have to take into account as well. Or if it's just started to pull back, like if we looked at this yesterday, we might say, well, where might we expect it to pull back to? And some might say, well, somewhere, between this 61 and 50% line might be typical. And it came down and kissed the 61, at some point it opened here and then rallied pretty dramatically. And today it appears to be off to the races. Okay. So if we wanted to buy the stock and have a short-term target, and you might say, well, at 51.94, that's not worth my while. But if you say, well, if I made my target, say 51.80, and I were buying in at 50.40, buying the stock, I obviously am calculator challenged. Sorry, 51.80. I think I hit divided by 50, 40. At $1.40, that's almost a 3% return. Like if I divide $1.40 by 50.40, that's a 2.8% return. And how long might we expect to be in that trade? A few days? It could be weeks, and we could never get to that target. But if you look at that and said, would you be okay with that return in the short term? Some might say yes. And if not, then you'd say, well, let's go and look for another opportunity. Okay. So let's look at another stock in the energy sector. So if we came and we looked at VLO. So VLO, and we've seen a lot of this, right? Where, and again, if we looked at just a previous example, we had this pullback. And if we looked at it on one of these days and we were looking at this and saying, what might a target be? We might have put in this 161 target and it would have got there. Now it would have spent a couple of weeks going a whole lot of nowhere. So some might call this a bull flag and a stiff wind, but that's a pretty big flag on a relatively short pole. But it did get there. Now, does it always get there? Not necessarily. Let's just remove that. Well, how about if we did it here? Because it came up and then pulled back. So this one, it would not have hit this target yet, from here. Now, it might never hit that target, but you might have said, so if I had placed this trade this day, we'd be how many days into this trade? Or if we'd placed the trade on this day, when we had this bullish Harami type pattern. So that was 8 trading days. And here we're already, 14 days in, and we haven't hit our target. So sometimes when we look at these and we're trying to decide, do we use a stock trade or do we use an option trade? With options, we have a deadline, and that deadline is our expiration date. If we're buying an option, we also have the challenge of time decay, where we don't have either of those challenges when we're buying a stock. And so if we looked at this and we said, okay, well, what if I looked at what's currently going on? So those are two examples. If we said, okay, I looked at this, oops, now I want to go back to my Fibonacci retracement. So if I'm going wick to wick here, this 161 target would be 268.51. So maybe we want to make the target like maybe 267. It doesn't have to be that exact target. And where might we put a stop? And again, if we want to see all these extensions, this came down to the 50% level, but we might say, hey, we're expecting this to continue to move to the upside. But if we really want to give it room to move, we might continue to make that 50% extension, our target for an exit, and say, hey, if it goes below that, so at 230.92 times 0.98, if it goes below 226, we want out. 226.30. So it's giving it some grace. And then our target up here would be 267. Let's make it 267.50. And so if we wanted to do this with the stock, we couldn't do this in our trading a smaller account. Well, we could, we just couldn't buy a lot of shares because this is a $243 stock. But in our other account, we certainly could. And so we could come here and say, we'd like to buy 100 shares, which represents about a 5% position. And we'd like to buy custom with an OCO bracket. We're going to put our target at 267.50. And we're going to put our exit at 226.30. And we're going to make both of these good till canceled. And so we're risking $17.26 a share for the opportunity to potentially make $23.94. Now, if the stock were to gap up, past this, we could end up making more. If it were to gap down below this 226.30, we could end up losing more. So we're going to put this in our stocks with targets, and we're just going to put a note in here. This is a fib extension target. So if we're looking at this in a couple of weeks and we're saying like, why did I pick that target? You can look at this note. And once we send this in, if you want to see where your note is, you can come to the monitor tab and we can click on this. So it's under filled orders. But it's also, if we look at our working orders and we come down to VLO, you can see this little note here. You click on that, our target will be, the note we made to ourselves is in there. Okay. Yeah. So JV is saying if Leo was trading stocks back in the day, he had to draw out the daily charts. Yeah. I don't think they certainly weren't trading stocks like we are now back in, in the Middle Ages, right? And just let me, yes, I do not have a statue of Leonardo, sadly. I do have the bird girl though, and the post she's in, it probably, meets some kind of fib ratios. Okay. Now, just to make a point, if I went wick to wick on this, and when I said that if you looked at this and used, you were doing the James body to body Boyd thing, I'm going to draw this again from the body to the body. our target, we had our target at 267.50. This target would be 258. So, when you take out the length of the wick on both ends in this example, now in some examples, it may not make much of a difference. But in this one, it's about a $10 difference in your target. So that's something to be aware of. So if it starts to get close and then looks like it's wavering and might be about to pull back, then, you might want to check that out. Now, can we use this, the other way? Because I've given you two bullish examples. Could we use this if something is moving bearishly? And the answer is yes. Now, what is the difference? And I'm just going to clear the drawing set. We did a bearish trade on Tesla, which I think hit our target in the other class. But we can see that Tesla has been downtrending, right? Right. Like here's our 30-day moving average, and it's come up, once, twice, 3 times a lady, 4, 5 times. And every time it bonks its head, and we're going to go back to the beginning of the rotation and start talking about support and resistance again. But it can't, this seems to be acting as a resistance level. And so, this tried to rally for a couple of days and it moved down. And the difference is where we start our line from. So when we're looking at a bearish opportunity, we're going to start at the bottom and move back up to the top. Now, I had my chart set up to accommodate a fib to the upside. So I'm going to come to my sprocket. I'm going to come to price axis where I had expanded the top. And we're going to say, yeah, now we want to expand the bottom and give us more room at the bottom of our chart. And so now we can see, and again, if I click on this bar on the left, now I'm getting my target. So this has rallied the last 2 days up to about the 50% retracement. Okay. Now, do we have a bearish entry here? No, we don't. Why not? Well, because we don't have any confirmation yet that the downtrend is going to continue. We've just had 2 bullish days in a row. So what we're looking for, like here, we had 2 up days. What we're looking for is a close below the low of the high day. And we don't yet have that. But should we see that on the chart and see an opportunity, then where might our target be? Well, we might have a target down here around this 340 level. Now, some might say, well, I'm going to go for this, swing target around this 364, 365 level. And one could do that as well. But that's just an idea of how we might look at a stock that's moving bearishly and how we might determine a target or look for, like, where do we think it might go up to before we're starting to think, oh, maybe this isn't just a trend continuation, maybe it's a change in trend. Okay. Somebody asked in the chat what's going on with Google. So we could have a look at Google. So Google today, and it has flirted with this line I drew around 296. This isn't the first time, but some might be concerned. Why might they be concerned when they're looking at this pattern? If we're playing I Spy with my little eye, what kind of pattern might we be seeing here? Go ahead and type it into the chat. Uh-oh. That is called a head and shoulders. Oops. I don't know why that's a head and shoulders. So here's our head. Or you might say, I'm going to turn that frown upside down. It's, yeah, some might say an inverted cup and handle. Yeah, it's a Head and Shoulders. And if it breaks below this neckline here, this 296 neckline, and it went up to 349, call it 350, this is about a 53-point move. And so a target, like if we're measuring it, using this Head and Shoulders pattern would be 53 points to the downside. So 296 minus 53, around around 240, 242. Now, could we do that using, a fib also? And when we look at this, Head and Shoulders are saying it might be a shampoo pattern. I like your sense of humor. But could, and when I say flirting, like it came down here and it opened below this line and then moved back above. Today, it looks like it's breaching it with a little more oomph. But if someone is trading conservatively, they might say, I'm going to wait and see if it comes down for another day or two and then tries to rally. And if it comes up and hits this, 294 to 296 area and then falls again, now I'm thinking we really have a legit Head and Shoulders pattern. But, another way someone might measure this, they might say, well, and we haven't seen this come up again, but if we looked at this pullback here, a 161 target might be around this 278 level. And, the 261 extension would take us down to 252. But, this rallied all the way back up to that 30, almost, it was flirting with that point of no return that said this is no longer a bearish pattern. And that's part of, how a Head and Shoulders pattern is created. It came up to this 38.2% retracement. Yeah. If there are other charts you would like to look at today as examples, we can do that. But, if we want to look at another bearish potential example, let's look at Microsoft. And Microsoft, so I was looking at different charts. And again, this is another one that we had done a bearish trade on that I think may have hit our target. We were going for, short-term targets. We'll discuss that on Friday. But, here we have a stock. I mean, it's been rolling down the hill since October. And again, like if we looked at this here where it had come down and then we had this rally and came down again, we could look at this and say, well, it fell from here to here. Where might we expect it to go? And again, we click at the bottom, we move to the top. We might expect a target of, a potential target could be 335. And you might say, well, that's kind of a longer term view. And this was just one when it rallied here and then started to fall. So I'm saying if we were looking back at this back here on February 11th, this might have been a target. And this is where, with an option trade, if we didn't give ourselves a lot of time, then time decay would have been totally eating our lunch on this one. And this is where some traders will set a swing target because it's shorter term. If one was to use this 161 extension and you were trading an option, and with bearish opportunities, one is more likely to consider an option, then, you're going to want to give yourself more time. Okay. So, and again, we had this 1-day rally. And if we're looking at this saying, well, let me just get rid of this. if we were looking at this here and now, we could say, and I'm just going to make this a 3-month chart. Okay, and we had this 1-day rally, so I'm going to go from here to here. So a shorter term target, and we have right now, it's trading below the low, a close below the low of the high day. This was our most recent high day. And we're actually hitting, you know, at least a 3-month low. In fact, I think this is a 6-month or might even be a 1-year low. Oh, not quite a 1-year low, but it's certainly a 6-month low. And so, you know, we could set a target here around 365. And if you're combining that with other information on the chart, like the average move over the last 14 days for this stock has been $8.69, and say, well, if it's at 374, 54, and I subtracted that $8.69, that would be 365.85. Like, you know, it wouldn't be a stretch to think that we might hit that target within a couple of trading days. And so, you know, what type of trading strategy might you consider? Well, you might just want to buy a put, or you might want to do a long put vertical. And, you know, with long put verticals, we tend to have a profit target. With a long put, we tend to have, you know, well, you can have a swing target. Now, we have nothing to swing to here. And so this is when we might come to Mr. Fibonacci and say, hey, can you help us? Or coming down to this average true range. And in this case, the average true range, if you were doing a 1 ATR target and Mr. Fibonacci, are pretty close. Okay. And so, you know, the point I wanted to make today is that these Fibonacci tools, if something's in the middle of retracing, you know, we can use this tool as a guide to say, well, how far might this come up before it falls? And in this case, it didn't come up very far, did it? But it's also a way of helping us determine potential targets. So we've looked at examples on the bearish side. We've looked at examples on the bullish side. We put in an example trade on VLO today. And, you know, if you wanted to practice this, one of the things you could do is take a look at different sectors. And so if I switch our gadget here and we come to our watch list, and, you know, I customize the watch list and add the 3-month return and the 4-week return. And then I get rid of bid and ask. And so if I come down to my personal watch list, I have created a quick group of scans. And if you don't have these scans, actually, I meant to pick energy. They're in the trade management mini sessions. There is, and if you've not seen these, you're going to want to subscribe to the channel. So just as we wrap up, like if you haven't subscribed to the Trader Talks channel from Schwab Coaching, you're going to want to do that. If you're watching this in the archives, you'll have that same button in the bottom right that you can click. But you can also come right to Trader Talks and subscribe. It's another free resource. When you first get here, whatever's being taught is what you're going to see. But if you come to playlists, and I happen to know that the Getting Started with Technical Analysis is down close to the very bottom. So here is the playlist. But there's also Trade Management Mini Sessions, another playlist. And if you click on that, there's a bunch of short videos on candlestick patterns at the top. In the middle are a bunch of example trading plans. If you come to the very bottom, in this turquoise blue, there's, you know, a bunch of short videos, and some of them I have to re-record because I did a lot of these about 2.5 years ago. and they're falling off the system now. But this using scans to create sector watch lists, and it's just a very quick and easy way to create scans by sector. And then if you save it as a scan, every time you pull it up, and the S&P recalibrates quarterly, so stocks can be added and can be taken away. It can be dropped off, so you'll get the current list, and then you can link this watch list to your chart. So if you're saying, well, the energy sector has been strong lately, I don't know why that's showing up like that. So if I come here to our public watch list, our sector indices. Now, one thing that these don't mean anything to me, so I add description, and then it will tell me what these sectors actually are. And so if you're saying, well, I'd like to practice this, so what I'm going to do, that up. So what I'm going to do is look for which sectors have been strongest. And if I look at the last 4 weeks, energy number one, like it's hitting a new all-time high today. What about over the last 3 months? What sector's been the strongest? What do you know? Energy, then materials, and industrials. And then you can run those scans and come through, and when you bring up a sector, then you can just link it to your chart, and you can pretty quickly go through and see where there might be opportunities. So Williams, here was another one, where it came back to about that 61% retracement line, and it's bouncing today. Okay, so guys, please hit like, hit subscribe. Don't forget to follow James and I in the land of X, James Boyd CS, Barb Armstrong CS. This has been an introduction to Fibonacci's. I hope you have found it helpful. Take care and have an awesome day. Up next is Swing Trading with Mr. Mike Fairborn. Thanks for joining me in the chat today, James, and thanks to the guys behind the scenes for helping bring this class to life. Take care, everyone, and have an awesome day.